trading Forex or thinking about futures. Both have their pros and cons. But if you want to know which market gives you more control and a fairer playing field, stick around. I'll break it all down for you. Forex and futures, these are two of the biggest players in the trading world. But honestly, if you want transparency, less risk, and true access to the market, futures usually have the upper hand. Today, I'll walk you through why that's the case. Whether you're just starting out or have been trading for a while, this perspective might help you trade smarter. The Forex market is decentralized, which basically means you're trading through brokers who connect you to liquidity providers behind the scenes. The tricky part is you don't always get to see the actual order flow driving the prices you're trading. On the flip side, futures trade on centralized exchanges like the CME, where everyone can see the same prices and volume live. This kind of transparency really makes a difference. When it comes to how the markets are structured and regulated, Forex is mostly an over-the-counter setup. Each broker sets their own rules, and these can vary a lot. Futures markets, however, are tightly regulated by government bodies like the CSEC. This means you get standardized contracts, guaranteed clearing of trades, and protections that make trading safer and fairer overall. Transparency and data are super important in trading. In Forex, you basically get the price feed your broker provides, which limits your view of the bigger market picture. With futures, though, you get level 2 market depth. So you can actually see real bid and ask orders from all traders. That kind of insight helps you spot when big institutions are moving, which can give you a real edge in predicting price moves. Leverage can be tempting, but it's a double-edged sword. Forex brokers often offer extremely high leverage, sometimes as much as 1/500. That sounds exciting, but can blow up your account in seconds if you're not careful. Futures usually have lower leverage, around 150 or less, which helps keep your risk manageable and makes your trading more sustainable long-term. Costs matter too, and they're often overlooked. Forex trading can come with spreads, swaps, and hidden markups that quietly eat into your profits. With futures, pricing is much clearer. You pay a fixed commission per contract, and spreads are set by the exchange, not your broker. This upfront transparency lets you know exactly what you're paying. Futures aren't just for quick speculation either. Big institutions use them to hedge risks, like airlines locking in fuel prices months in advance to avoid surprises. Forex tends to attract more short-term traders and scalpers rather than big hedgers, which changes the market dynamics quite a bit. While Forex markets have huge daily volume overall, that liquidity is spread across many brokers and platforms. Futures markets, especially popular contracts like the S&P 500 or gold futures, concentrate liquidity in one centralized place. This usually means tighter spreads and better order execution for traders. So what's the bottom line? If you care about regulation, transparency, and a level playing field, futures often give you the edge. Forex can be exciting, but it's riskier, less transparent, and you're relying heavily on your broker's honesty. Knowing this can help you decide where to put your money and trust. Before placing your next trade, ask yourself, do you want to trade in a market where rules are clear, data is real, and risk is better controlled? If the answer is yes, then futures might be the smarter choice for your trading journey. One big difference is trading hours. Forex runs 24 hours a day, 5 days a week, covering all global time zones. That sounds convenient, but it can make it hard to step away or keep discipline. Futures trade during set hours on exchanges, giving you clear start and stop times. Something many traders find helps build better routines and focus. Forex lets you trade really small amounts, called micro lots, which is great if you want to start small or test strategies. Futures contracts are standardized and often represent bigger amounts, so each trade requires a bigger commitment. That's good if you're serious about exposure, but beginners should keep this in mind. In Forex, your broker is your counterparty. That means if the broker runs into trouble, your trades and funds might be at risk. Futures trades happen on regulated exchanges backed by clearinghouses, organizations that guarantee trades even if one party defaults. This adds an important safety layer. If you're looking to take your trading to the next level, Earn2Trade offers one of the best funded trader programs for futures out there. The biggest advantage, you get to learn and trade without risking your own capital. Their programs provide full trading education designed to help you improve and succeed. Here's how it works. You start by trading a simulated account during an evaluation phase. If you meet the goals and follow the rules, you get funded with a real trading account. This means you can trade money and keep a large portion of your profits. Earn2Trade offers two main paths: The Trader Career Path, which is a step-by-step program where you start with smaller accounts and can scale up to managing accounts as big as $400,000. And the Gauntlet Mini, a challenge focused on intraday trading skills. Their educational platform is solid with beginner crash courses, webinars, a trading simulator, and helpful tools like Journalytics to track your trades and performance. This makes it great for traders serious about improving their skills in futures markets. Earn2Trade is well regarded in the trading community. It has a strong reputation with a 4.7-star rating on Trustpilot and over 3,000 reviews. They pay profits on time and have good customer support, which matters when you're trading real money. The evaluation fees depend on the account size you want to aim for, starting around a $50,000 account. After passing the evaluation, and you can withdraw up to 80% of your profits. If you want to try Earn2Trade, I have a limited time offer. Use my code to get 60% off your evaluation fee. It's a great way to start without spending too much. To sum it up, Earn2Trade helps you trade while you learn and get better. Price manipulation can be a concern in Forex because brokers control the price feeds and spreads can widen or slip during volatile times. Futures prices are set transparently by real on the exchange, reducing the chance of unfair pricing or manipulation. Forex positions can be rolled over daily with interest swaps, which adds complexity and sometimes extra cost. Futures contracts have specific settlement dates, which makes planning trades and managing risk more straightforward, especially for longer-term strategies. Trading Forex nonstop hours can make it tempting to overtrade or get stressed, especially if you're stuck in front of screens all day and night. Futures fixed trading sessions help many traders keep emotions in check, encouraging better discipline and decision-making. Forex markets are full of everyday people trading from home setups. Futures markets tend to attract the big players, banks, hedge funds, and professional traders, all competing on the same transparent stage. Knowing who you're up against can help you understand the market's behavior better. So choosing between Forex and futures really depends on what suits your trading style and goals. Forex offers 24/5 access and smaller trade sizes, making it flexible and beginner-friendly. Futures, traded on regulated exchanges with fixed hours, provide greater transparency and standardized contracts, which many find reassuring. Both markets have pros and cons. Your best choice depends on your risk tolerance, schedule, and what kind of trader you want to be. Whether you're new or have some experience, it's a great choice if you want to trade futures. So yeah, I think that's all for now, guys. Thanks again for watching and see you next time.